The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It is Thursday night here in Asia. It's Thursday morning in the States. Good to be back. A couple of things going on today. Initial jobless claims at 8:30. Chicago Fed National Activity Index 8:30. FHFA House Pricing Index 9 o'clock. A couple other things down here, but nothing really major. There's a Bloomberg Consumer Confidence Index at 9:45 that not too many people pay attention to relative to the Michigan Sentiment Index. Interesting story about that. I don't know how accurate that thing is. I got called literally one night by the Michigan University Sentiment Index pollers, if you will. And it takes about a good 40 minutes to answer all the questions for them to actually compile everything to create, a Michigan Consumer Confidence Index. And the guy who was interviewing me was a grad student at University of Michigan. I'm assuming in economics or sociology or something like that. So it was really weird because he basically confided in me because I kind of started talking to him on a different level at the end of the interview. And I actually like to be interviewed by people and answer questions like that. It's just relaxing. I'm just weird like that. But he had such a good time with me. He actually called me back every month because it was so difficult to get people to sit there for 40, 45 minutes and answer all these questions. Nobody would do it. So then you got to think about, what is the Michigan Sentiment Consumer Index or whatever it's called, that a lot of, obviously financial activity is hinged upon. You've got a bunch of grad students calling people that the whole data is skewed because most of the folks who really are the temperament of the economy don't have time to deal with this. I'm weird. I sit there and kind of relax and drink a beer and just answer the questions. It's completely relaxing to me. But then he calls me back every month that he can get me because I'm easy prey and I can answer all the questions and I don't mind doing it. So is the data skewed? Without question. All right. So just wanted to throw that out there. All right. Let's take a look at the euro. Euro, we've been kind of overly bearish on the euro, and it did stick its neck above the recent unfair highs on a previous profile at 127.36, and that's that was the uncle point for me. There's no sense in it was okay to be long, not okay to be short above there. You can always enter lower if the market comes back in, or you can always enter higher. You can always enter higher if you're provided some new inflection points. 2 days ago, didn't talk a lot about this yesterday because Eric was on the show, and I just think he's a great guest to have on. He's such a wizard when it comes to so many topics in the financial world. But this new inflection point around 128.30 was, pretty much kissed up there. We hit 128.40. I'm going to call that in the very general neighborhood. Around these currency situations, you got to give yourself a little bit of noise factor around these inflection points, and we hit that, and lo and behold, we come down and kind of targeted the bottom of our box here on the current profile, explored the entire fair auction, which is a really nice situation, 126.34 rounded off. We've reached a low this morning of 126.14, so 128.30 down to 126.34. So that's a 200 pip move, just staying in the zone of lose a little, lose a little, lose a little, make a lot. This is one of the make a lot deals where you made 200 pips, 200 points, however you want to look at it, in a matter of about 24 hours, actually. And getting stopped out of these things as we go into these inflection points, I mean, this was a kind of holy grail for a while, being short the euro. I'm going to go back in time. There's little stop out actions that you kind of have to suffer through, but when you play that game of, let's put the risk reward scenarios in perspective. We're trying to risk a point or two to try to make quite a few every time. That math is going to work out in your favor over time. I mean, it's not a mystery, it's not a theory, it's a mathematical fact. If you're right about 50% of the time, which is decently right, and you're risking one to make 4 or 5 every time, you will win. All right, so that's, again, hate to beat a dead horse, but you can't say enough about that concept. So the euro, in my opinion, where are we going tomorrow? Where are we going today? Still bearish. I still think we talked about this on the weeklies. Targets ultimately 125.74 down below. We haven't hit those. We've gotten very, very close. But again, I think breakouts need to be sold below there, and also breakouts, if we can consolidate down here on the daily. We reach some targets, don't look a gift horse in the mouth, but if we can get a close below the daily and especially below the weekly, you're going to hear another whoosh sound on the euro on the downside. And, I think 120 is in order here or lower. So, again, these are the kind of things, if you're playing it for a long-term view, give yourself a little more room to be wrong, but there's no reason to give back so much when you've got, in my opinion, some decent inflection points to key off of here. And that scanner actually just kind of preloads them for you. And I'll pull this up really quick and show you. Well, don't have it loaded. We'll show that in just a second. So let's go into the pound. It's just a real neat way to look at the markets, and it kind of makes it overly simple for me, which I'm getting old and senile, and simple's good. So here's the situation on the pound, relatively similar. Had a better situation on the pound here when we rolled into these. How's my connection now? We looking okay here? Okay. Okay, so the inflection point here on top, 161.57. Thanks, Jay. Yeah, I know we've got a little bit of a technical issue here tonight, so we're going to try. Okay, we're going to stay on that, Jay, and thanks for hanging in there. Thanks, Al. Inflection points on the British pound, a little bit overextended there, but this is actually a really good example of if your stops are relatively tight, and we never got a close above there. That's one of the things also in the pound. Just giving a little bit of education this morning. Never got a close above that inflection point, and we stuck our neck up a little bit high. It's okay to get back in these trades when they look a little riper, and even the same area that maybe you were leaning on before. And again, lose a little, make a lot. That's kind of the theme here. We've hit the targets to the tick almost down here on the pound, which I was hoping would happen, exploring the entire fair auction, okay? A lot of times that will happen. So the lows this morning are 159.95. The unfair lows here are 159.81. So we haven't quite gotten there yet. Let me see if that's right. It doesn't look right. Hold on, guys. Let me see where the lows are. Come on, E-Signal. Let me see where our lows were here, just to verify that. 159.90, excuse me. 159.90 are the lows on the British pound, excuse me, and the unfair lows are 159.81. So we came within 9 ticks. We're kind of rallying off, and we've got a currency product. We talked a little bit about giving yourself a little bit of noise factor around these things. I'm going to call that satisfied, but again, I think closes below 159.81, and on the weekly, you got 159.52 down here. This is a little bit more stronger inflection point. So if I'm going to buy breakouts on the downside, I'm really going to want to see closes below the weekly unfair low on the pound. it's just probably the smarter thing to do. And, being patient, especially when something's been down for a while and the volatility's in these things, you really just kind of almost want to wait for the market to come to you sometimes. Use the fences, use the inflection points to lean on, and take it from there. Australian dollar, I know we've rallied a little bit here. We're just going through the currencies first segment here. Had that new profile up here. That new unfurl on the weekly, 87.19 down below. But I'm really looking forward to this. I'm not going long the Australian dollar right now. I'm just passing on that. Our navigator's pretty much in tune with what we want to do here on the short side, and I'm also looking on the Australian dollar, looking for closes below that weekly unfair low. On the daily, we talked about this on the intermediate basis, shorting against the unfair highs and shorting breakouts below the unfair lows. Those unfair lows are 86.92. The weekly, again, just to reiterate, 87.19. So let me pull up those numbers again for you. 86.92, that DMZ between 86.92 and 87.19. We're going to have to get through all that, close below, and then I'm going to feel a lot better about this thing. And the reason being is that, these things don't give you a free lunch. I mean, we got down here close, hung around by recent lows. These double bottom, triple bottom things, I'm not a big believer in them. Classical technical analysis, there's a row of PhDs at most of these banks that are trying to shove people out of these types of trades. So I'd like to see some closes below here and then have it race and just hit some people's stops down below. That's the way I'm looking at the Australian dollar, along with some fundamental news that is really an overhanging shortest dream. Let's take a look at the yen, because this is, again, one of my favorite trades. Tried to pick some battles on the yen on the way down to buy support, and I think John in Philly is probably possibly super happy now because we got that big pullback. Hadn't forgot about you. 105.44, and then we used that leverage point. If you can see this, as we got caught a bit in this thing, got back above the weekly profiles. That's great. Came back and retested, if you can see that. All right, that's super powerful. The low of that move, 106.25. That unfair high, 106.14. So very, very close. Close above, retest. That's the powerful trade right there. And now what do we do? So we're trading now on the yen, back above that previous unfair high. We're probably going to shoot for this as a target, 108.39. We'll be right back, folks. Hang in there.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're going to take a look at the ruble. I don't know if anybody's been look at what's going on here. Come on, guys. All right, here we go. This is our 60-minute just to kind of bring out the latest launching pad thing we talked about actually yesterday and the day before. If you can see that, here's the situation on the daily. We talked about this thing kind of compressing up into the latest inflection point on the ruble. This thing, in my opinion, has no end in sight. If you can find a way to trade this, it's not a bad idea at this stage. Here's the new support area for the ruble, 41.14. Had to close above, haven't even looked back. Again, I don't know what's going to bring this thing down except for just a massive go to your knees type move on Putin and say I was wrong. And I don't know about what the chances of that happening are, but the good news is you can place stops around trades like these and lay the wood to it sometimes. Here's the situation on the dollar as we kind of finish up with some currency notes here. Talked about, buying the dollar, not selling the dollar, buying the dollar again as we cross some former borders here. Here's the latest one. 85.40 talked about that, talked about not trying to get involved with this noise down here below this latest profile, and being able to shoot for targets that we've kind of hit and kind of come off already this morning and yesterday, actually. Let me see if we can get that a little bit better picture here. Okay, so again, we're going to start having to have closes now above, because we kind of made the move. The recent move has been made. Those unfair highs are 85, let's just call it 85.97, rounded off. We've reached a high of 86.0203, so I'm going to call that satisfied. So now I think it's a waiting game. Not a big fan of shorting this. I think it's a waiting game at this stage on the dollar to see if we have a close above that 86 general neighborhood, and then maybe even that 86.15 previous unfair high. And then I think, we could have a situation on our hands to go north even farther. Now, relative to that, and relative to a pretty decent dollar move up, we're going to take a look at crude oil and gold really quick here. Gold's been a little, pegging itself a little bit to that latest dollar move here, and we talked about there's the daily situation. We talked about using now the new support area, since we got a launching pad situation and a retest off of that 1227. 41 was kind of the next Custer's last stance for the longs, in my opinion, just to kind of take a break if we get down below. I don't want to be short gold. And with the dollar making that move, I actually think gold's kind of, not done terribly bad repricing itself. So I'm looking for moves back above 1241, or now 1227 is not my main concern on the downside. If we can get a pullback down into 1218, I'm a buyer again. So I'm using those two levels to pay attention to: closes above or pullbacks into, closes above 41 or pullbacks into 18, just to regulate how I'm going to look at gold. You want to try and find high probability areas to pick your battles. And right now, again, we've got a POC here on our daily, relatively wide box, not too wide. This is something to pay attention to. Remember, most of the data has light in the mode as we look at it that way, not the mean, the mode. And that POC is 1232. And we've kind of used that a little bit here, but now we're kind of falling back into, the upper band of the data here in this profile. So, again, I think 1218 is a little bit riper opportunity. 1227, again, that's just the way I'm looking at it. Let's take a look at silver while we're on the gold topic. Silver's amazingly range bound. We talked recently about maybe possibly looking at this just to kind of be a little safe here as an opportunity to do a big strangle here. I'm still a big fan of that, and that's the way I'm looking at silver. So when we come back, we're going to take a look at a couple other commodities that we normally don't look at. We're also going to look at some earnings related. Since this is earnings season, there's a ton of stuff out there. You guys feel free to call in 877-927-6648. We'll be happy to take a look at some. You might have some willies about with this earnings season now. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Our audio, I think we're going to not run with the video right now. Okay. All right. Good to be back. Here's the situation on crude oil. Unfair lows here. Sitting down below 79.97, let's call it 80. We bounced off of that this yesterday and this morning. Lows have been around 80, 80.05 yesterday, 80.22. So I'm going to call that satisfied. This is going to have to hold for crude oil. Any closes below here, we could hear another whoosh sound on crude oil. Unfair high is 85.18. This is the December contract, guys. Here's the situation on the weekly on December. Nothing down here, no new profiles attempting. And again, keep your eye on 80. That's going to kind of be the Maginot line, if you will, for crude oil. Not a big fan of buying crude oil here. Not a big fan of buying this bounce. Let's take a look at treasuries and the indices because we got some new information out. That 830 kind of employment numbers here on Thursdays always. Here's the situation on the daily. You know, we're kind of still in that 33, 37 to noise area. We're trading 38 right now, 38.75. You know, if you look at this is not the type of action you want to see for pulling back off an inflection point. We talked about this yesterday in yesterday's free video. We talked about not doing anything on the short side. We picked a couple of battles on this rally. two, I think, and then this was kind of the third one. Again, lose a little, lose a little, lose a little, make a lot, that kind of concept. But again, we picked up, about 15, 16 points off of that pullback off of this DMZ up here with a little bit of noise factored in, but now we're right back in it. This is our daily chart on the this is our daily chart on the S&Ps. So, got to put your stops in, but I'm still looking at this as something we just got to pay attention to. The market as it opens, I don't know if it's, obviously we've got a little bit of a move up, but, it's no big deal. It's one of those Thursday deals, and let's just look backwards in time. The 5.9% unemployment rate, everything was great. And then we had the massive sell-off. So I don't know what a employment rate percentage is actually going to do for the market in general as we come out with those. And let's see, when is the next one? I guess the next big one's on the 7th next month. So as we take a look at the NASDAQ, let's just kind of point out the inflection points here. We talked about picking a battle here. Didn't work out. Now we're coming back up into previous unfair lows. That's kind of the next focal point here. And the weekly situation as we look at it on the NASDAQ. Yeah, so the big numbers on the 30-year down below. I think the maximum support area is going to be 140.27 and then 144 up top. So, again, those are the numbers. And the cool thing is the weekly, we've got one weekly bar. I don't have a lot of data back on this, but that coincides pretty much with that 140.16 up for highs on the weekly, which is very similar to 140.27 on the daily. So that's going to be the maximum buy point. I don't know if these treasuries are going to get much lower, but you're right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Just going to cover a couple of things here on the scanner, the profile scanner. I just picked out, daily stocks that are trading below profiles still. Northern Trust sitting right on the ledge there as we see that, and below profiles on our weekly. Chipotle, we went through that yesterday. Coca-Cola, obviously not the greatest situation. Boeing sitting here. Bank of America, these are ones sitting right on the cliff, hopefully, for a ripe opportunity if the market turns down. IBM, let's just kind of relook at IBM really quick. IBM, see if there's anything to trade the mass exodus here with. Here's the situation on the 240. Not a lot we can talk about on this one. No daily new information. 164.18 is a rally point resistance area, in my opinion, down below 162.51. But this thing's so daggone volatile right now. I think it's probably better served to wait until some new daily profiles appear. Probably be a much more reliable set of inflection points to key off of for IBM in general. Okay, let's pull back up the scanner really quick. And as we see, let's take a look at Northern Trust, NTRS. Here we go. A couple of possible ideas here. Pre-market trading 61.80 something down there. So what does that mean? That means on Northern Trust, this was a cool thing here. Close below weekly profiles, go back and retest, have rattled around down here, not wanting to rally in the midst of a pretty good market bounce of 6 or more % here. Let's go to the daily. Let's look at this. Not a close below this, but unfair lows 62.14. That's the inflection point you've got to pay attention to trying to trade Northern Trust Corporation. So again, the 240s, I'm not paying super attention to those. that daily inflection point at 62.14 is kind of what I would hang my hat on as a trader, above or below. So again, I don't know if you can try to nibble on the long side this thing until we get back above that, if you're trying to do that. But I think the market on a relativity type scale, this stock has showed its hand. It's not a happy situation. And if the market turns south, it could just drag this thing down into, not in the abyss, but it's not going to be a super happy situation for longs. It's not the best long candidate, in my opinion, you could find out there. Here's Citigroup. This is a situation on the weekly. Finally stuck his neck back above the weekly on furloughs, 50.48. That's the big number I'm paying attention to on Citigroup. And 50.48 combined with 50.14 on the dailies. That's kind of the good news. You can place stops oriented around a dual time frame inflection point. If you've got Citigroup in your portfolio and you're trying to trade it from the long side, you can always get yourself stopped out and get back in that thing. But again, not the ripest situation in my opinion, along with some of the other banks here. Guys, stay tuned for Steve Rhodes. He will be up momentarily, and we'll pick you back up again tomorrow on Friday. Thanks for joining us today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.